Renewed trade tensions rattling markets again this morning. Futures pointing to a sell-off at the open on news that President Trump will reportedly block Chinese investments in U.S. technology and the export of some U.S. technology to China. Joining me now is CEO of Esposito Securities, Mark Esposito. Mark, so far, fears of a full-blown trade war haven't proved to be a complete bull market killer, but what are your expectations moving forward? It was a rough week last week for stocks.
Yes, good morning. Thanks for having me. I think that if you take the U.S. subsidiaries that are in China and the China deficit, the real issue is that there is no deficit. And so I think although we'll see up and down trading patterns over the long term and short term, there's really a zero-sum game here. And I think what we'll end up seeing is that it's a lesson in futility. Although some companies will be up and down, I think that net-net, it's a flat zero-sum game.
Mark, we're hearing this morning Harley-Davidson is out with some headlines. It's preparing to shift some production out of the U.S. for European Union bikes because of tariffs. What is your take on what could happen to other companies? Do you need to start, is this a big picture market problem? And look at Harley-Davidson stock, it's down almost 3% in pre-market trading. We're seeing weakness on this, this China crackdown by the Treasury Department. We're seeing weakness in some major technology names like Intel, for example. So is this a stock-by-stock issue or a broad stock market issue?
I really think it is an individual stock-by-stock and sector-by-sector issue. I think like Harley-Davidson, you will see some stocks get hurt and some stocks take advantage of these trade tariffs. You're definitely right about that.
So Mark, when you look at the growth data right now, it looks like the U.S. economy is going really strong. The estimates for second quarter growth are coming in around 4% or even higher. Europe, meanwhile, looks like it's softened. It had a weak first quarter and doesn't show signs of bouncing back. Is now a time for investors to be putting their money in the U.S. and keeping it off the global landscape? Or is this a time to be looking beyond these second quarter growth numbers? Do you think things will even out for the rest of the world?
Yeah, I think the stimulus package here in the U.S. has really helped. Regardless of interest rates or tariffs, we're going to grow at a nice clip, and we saw that last quarter, and that will continue for the next quarter or two. I think internationally, I think people are underestimating that in Europe, we're probably only in the second inning of a bull market, and internationally, we're probably only in the first inning of a bull market. So although we're seeing short-term trading slide, I think long-term the fundamentals are there, and you'll see a bull market continue across the world.
But John, I want to point something out. China is in a much worse situation in terms of its economy and even stock market than the United States. People who believe in Trump's policy on tariffs and these restrictions on technology investment here in the U.S. and export of U.S. technology to China say, hey, it's beginning to work, or we have the upper hand here. The Shanghai was at a 2-year low last week, the market there.
This is why President Trump thinks he's winning this trade fight and that he can't lose. The Chinese have their growth also slowed down in the first quarter, and we're seeing them take steps like pumping money into their financial system to try to keep the economy going at a time when they were trying to cut back on all the debt that was flowing into the economy. They're now pumping it back up. So, China has a delicate game that it's got to play with its own economy.
Christina?
Yeah, and what's going to happen is we're going to see American companies that are hurt because they've done this before with South Korea when they were at war disputing with them. They encouraged even Chinese people not to go to South Korea. So there's something there. But also, China is the largest U.S. debt holder, too. And that's something they can start selling off some of their debt. We're seeing it with Russia already doing so. Could that potentially hurt the bond market going forward and rising yields already being a case? So that's something that I think
But if you sell debt, though, it drives down the value of your own investment. That's why people have argued that China wouldn't do that.
So I think the larger question I think that the folks at home are asking and the American worker is asking is, I think the unknown question is, yes, the market's doing well, but what happens when China or Europe decides to retaliate? in this world that we're currently living in, where Trump is trying to sort of play this trade offensive, right? Like when these countries retaliate and they go after farmers or they go after our manufacturing, isn't that going to hurt the American worker?
Trump's calculation is that the Chinese don't have enough to retaliate against, because we only have a couple $100 billion of exports.
It's $130 billion.
But they have the ability to, if I'm not mistaken, to absorb any type of tariff. Like the government will pump money in to protect these industries, and we won't do that here in the United States.
Well, they're trying to do that.
The question for the Chinese is, do they start going after American multinationals that are doing business in China and exporting out of China? Now, that's a tough calculation for them, because they built their whole economy on being a place where that foreign companies want to invest in. If they start making life difficult for our multinationals, then that whole investment proposition
and you watch
diminishes.
things, and I know we have to go, but if you watch the price of soybeans hit a 2-year low. And so even if you don't have China pulling back on soybean purchases, which you did initially, they can turn that on a dime. So there are, particularly American farmers here, or even
who are nervous. They're sweating right now.
The locker maker imports rolled steel to make high school lockers. Again, the Wall Street Journal wrote about that. Yeah, exactly. And that's both sides of the aisle. Coming up, and thanks to Mark Esposito for coming on.